Hey, what's up, homies? Welcome back to the Homeys Real Estate Podcast. This is your host, Anthony.
I'm Angel.
I'm a realtor.
I'm a lender.
And hopefully together we can give you a pretty good idea of what's happening in today's real estate market. We got a super good one for you. We're going to be going over income and qualifying for a home. I know tax season is here and we get several questions. Hey, what qualifies for income? What doesn't? We're going to break it down in this podcast. So, Angel, let's go ahead and jump right into it. First things first, what types of income count towards my pre-qualification amount?
So yeah, I mean, obviously, if your base income, right? Of course, whatever you get paid hourly or salary, you can use that. Commissions you can use, overtime you can use, bonuses you can use. Those are pretty much the core ones for the income side of it.
Gotcha. What about, let's just say I get some help from the government. Maybe I get like a disability or...
Yeah, definitely. So those were basically, so the ones I just went over were if you have a job, right? Those are incomes you'll see in a workplace. But of course, people receive disability income, or you can also use alimony income. You could also use child support income. You can use income if you get a pension, right? You can use that income, Social Security income, all that income you can use as well when you're qualifying for a home.
What about unemployment income? Is this something you can use towards your home as well?
Question we get a lot right now, because of course a lot of people are on unemployment, a spike in that recently. Unfortunately, unemployment income, we can never use that, right? So it has to be either income from a job or income from that you're going to see long-term. Unemployment income is temporary income, so it's really why we can't use it.
Gotcha. So let's jump into some of these base incomes that we typically see, right? Salary, commission, bonuses. How does the bank calculate this income?
Yeah, so with salary, you just use your base income, right? So if you work 40 hours a week, let's say you make $20 an hour, we use that. That's your income, your base income, right? Or if you're a salary employee, if you make $70,000 a year, then we use that income. For commissions and bonuses and overtime, the bank wants to see a 2-year history of that, right? So how they do that is we go ahead and we will look at your previous 2 years of employment, seeing exactly how much have you made in each category, and we divide it over 24 months. That's going to let us know exactly, or give us an average, right, of how much you've been making in each category. One big thing too is the bank's going to want to see that it's a continuous growth, continuous growth, or at least steady, like each year. So for example, if you worked a bunch of overtime in 2019, but then in 2020, because of COVID, it did fall a lot, we can't use an average. We're going to have to use the lower year of 2020 because it's not growing every year. The bank wants to see that. They want to make sure that you're going to continue to make more money each and every year, especially through those specific categories of bonuses, commissions, and so forth.
Gotcha. So you're telling me for bonuses and for commission, you want an average of the last 2 years. So let's
Correct.
just say year one, I made $15,000 in commissions, right? And then year two, I made $35,000 in commissions. So I made $50,000 in commissions both years combined.
Correct.
The bank is going to make it so that I'm making $25,000 a year, and that's what's counted towards my income, correct?
Exactly.
Same thing for bonuses,
Same
right?
thing for bonuses, same thing for overtime as well. But if it was the opposite, right? Let's say you're making 35 in 2019 in commissions, and then last year you only made 15, then the bank only takes that 15 mark because they want to mitigate their risk, right? So they want to make sure that there's growth in your job and in those specific categories.
That's really important. Okay, cool. So let's jump into pensions. How does the bank look at pensions?
So pensions, it's pretty much, you're getting your salary, right? Not your salary, but you're getting your monthly paychecks and stuff like that. So every year you're going to get a form with your pension, how much they paid you out that year. So we're going to need to see that. And then we see your bank account, seeing how much you're getting your monthly deposits for. And we can use your pension. That's no issue at all.
Gotcha. So it's very simple, right?
Very
Just like it's the income, right?
Exactly.
It's just a pension.
Exactly.
Same thing for retirement, right? Withdrawal. So
Well, retirement withdrawal is different, right? So if you're purchasing a home and you're withdrawing money from your retirement, that's not income, it's assets, right? So that's asset that you have. It's money that you have available to you to purchase your home. You can use that money to withdrawal. So if you have a 401k that allows you to withdraw that money, or 403b, whatever the case may be, that allows you to withdraw that money, you can withdraw that money, and it's no problem to the bank. We just have to see terms and conditions for that withdrawal, right? So if you have to pay back the loan and so forth, the bank just has to see that. They don't count it against you, that payback, but we do need to see that your retirement provider does allow you to do so.
Gotcha. So if you do a retirement withdrawal, can that be used towards your income, or is that just used specifically for more down payment?
Specifically just for down payment. It's not anything counted towards your income. Because again, with income, it has to be, you have to see continue with, you're going to continue to receive this. That's consistent. What the key wants. That's what the bank wants to see. So with the withdrawal, it's just a one-time thing. So we can't use that as income. Again, but we could use it as assets, which a lot of people do. If you are hesitant of touching that when you're purchasing a home, I recommend it. People don't want to touch the retirement income, but having a home and the assets or the equity, right, you're gonna build on your property, I think it's 100% worth touching that retirement income.
Absolutely. Okay, cool. So let's touch on short-term capital gains and long-term capital gains. So how does a bank look at short-term first?
Very honestly, pretty much look at them the same, right? So if you have let's say an account for your stocks, or mutual funds, or whatever the case may be, you can withdraw those as well. And again, it's not to your income, it's to your assets. So you can withdraw that money from those accounts and use them as your income. As your assets. So you can use it for down payment and closing costs. Let's say if you sold a home recently, right, and you're gonna make X amount of dollars, as long as that money is deposited into your account, we can see that you sold your home. We get a settlement statement for when you sold your home. We can use those assets right away as well. Assets. Correct.
So it's going to be used towards down payment, not necessarily towards income.
Exactly.
If you are, let's just say, a flipper or someone that's consistently doing short-term capital gains, or let's just say you're a stock trader that does consistent short-term capital gains, how does the bank look at that?
So again, as long as we can see your accounts showing that you do own, that's your money, that's your assets, and you can transfer from one account to the other. There should be no issue with that, using that money, as long as you can. The main thing is always that you can source your money, which you should be able to. If you sold a home recently, if you're flipping homes constantly, you're going to have an escrow company that's involved, having settlement statements showing that you sold that home, that you got paid out this much. That check's going to be deposited into a bank, so that money's no problem to use, along with, let's say if you're trading on TD Ameritrade, you have an account. That's another, TD Ameritrade's pretty much another bank, right? So you have your statements there to show your income and all that stuff as well, from what you're making from your stocks. But again, stocks, anyone who trades stocks and are in and out of stocks or whatever, that money stays in that stock account unless you withdraw it. So it's not income either. You choose when to withdraw it and so forth.
Gotcha. Okay, sounds good. So let's jump into calculating disability. How does a bank look at that?
Disability is really simple. So you should be getting an award letter like Social Security disability stating how much do you make, in disability income, along with Social Security income. If it's not taxed, we could gross it up 110%. So if you make, let's say, let's try to make it simple. If you make $1,000, we can give you $1,100 as your income because it's not taxed, right? So some disabilities you can gross that up along with Social Security income. As long as we have your award letter, we see your bank statement, seeing how much you're getting deposited each month. Disability is very simple to use, and it's definitely no problem.
So everyone, or a lot of people, should be getting a stimulus check soon if they haven't gotten one already. Will that be used towards my income? Will that be used towards my down payment? How does the bank look at that?
Yeah, again, stimulus checks a one-time thing, so we don't use it as income, but we do use it as assets, right? As money that is available to you. Anything, if you look on your bank statements, any deposit from the government is gonna, or for specifically from the government, from the Treasury, it's gonna stay there on your account. From the U.S. Treasury. So your stimulus check or your refunds that you get back from the government, all that money you can use towards your down payment. That is no issue at all.
Got it. So all in all, it looks like if there's something with a consistent monthly deposit or payment, that can easily be used as income as long as it's not unemployment.
Mhm.
If it's a one time or a very unfrequently withdrawal, then it cannot be used as income. It's going to be used more so for your down payment, correct?
Exactly.
So I know you mentioned earlier that you're looking for about 2 years of work history, right?
Mhm.
Is there any way around this 2 years of work history?
Yes. So the only way really around it that I'm aware of is through school, right? So if you go to school and you get a degree in something, let's say for example, it can be any school. It can be if you go to a university and you get a degree in, let's say, biology, and you become a biology teacher, you can use that income right away because you went to school for that and you got a job in that, right? So you can use it right away. Same if you go to a trade school to become a mechanic and you get a whatever type of degree or whatever certificate there is for mechanical work, and then you're now a mechanic, you should be able to avoid those 2 years of work history, because the school years count as the 2 years. So yeah, that's pretty much the only way around it, but that I'm aware of.
Got it. So I guess the last question, that I have, and it's something that I get asked all the time. What if I own my own business? How will I be able to qualify for a home? Is there a way that I can use, hey, stated income, like I make this much, or maybe provide bank statements? How does the bank look at that?
Yeah, so there's different programs out there, right? First and foremost, you can still do regular programs, FHA and conventional. Those are, the 5% down, 3.5% down payment assistance. Those are all still available to business owners. But how the bank looks at that, right, is rather you file corporation taxes or whether you just file a Schedule C on your personal taxes. They take the whatever net income, not your gross, and that's where a lot of business owners get confused. Is they say, "Oh, I made 200,000 last year," but then on their net income after deductions, some are even in the negatives, right? So we don't look at the gross income. The bank doesn't care about the gross income. They care what is that net pay at the end of the year. So they take whatever net pay, for example, you had in 2019, and then they take it in 2020, and then same thing, similar to commission and bonuses, you average it over 24 months, and the bank wants to see a growth each year, right? So if you report less in 2019, more in 2019 than you did in 2020, it's not going to benefit you as much, right? So try to show that continued growth. There's also a 1-year tax program. Nobody likes to pay Uncle Sam, so I get it. As a business owner, you do have your expenses, your deductions. That's a beauty of being a business owner. So you do have a 1-year tax program that you can use. We just use 1 year of taxes, so you can just report 1 year of high income, and it's 5% down. That's definitely a big option that I give to a lot of business owners. It's a good one. And then, you have the other, the more conventional products like the bank statement programs or profit and loss programs. Those are good programs, but again, interest rates are a little higher on those. So, but they are available to you.
Awesome. Well, I guess that covers the majority of the questions that I had, Angel, in regards to qualifying for a home, what qualifies as income, what doesn't, what does it look like for a business owner. If there's any questions that you homies have for either Angel or I when it comes to taxes, income, qualifying for a home, feel free to reach out to us. We're always happy to answer those questions for you. You know what our Instagram is. Angel's Instagram is Your Mortgage Angel. Is there any last words you have for the audience, Angel?
So just want to actually touch up on 2 more things, just because I know we have a client that's actually going through this, and a lot of people going through this. So, and it's basically what happens if you're off of work, right? Let's say if you're unemployed for a certain amount of time, like what does the bank need to see, along with if you get a new job, or if you get a new job, or they go from a part-time to a full-time. So just want to break over those 3 things real quick. So if you're at a job, right, and let's say even if it's the same job or a different job, and you're off for more than a 6-month period, you have to establish 6 months of a work history again in order to qualify again. So you don't have to have 2 years of consecutive income necessarily, but you just have to have consistent income, right? So once you longer than a 6-month period, it's a long period of time, over half a year, you're going to have to establish working for 6 months again. So with that being said, if you are back within that 6 months, if you're at a new job, right? So you got let's say if you got laid off from one job and you're back and you get a new job in 5 months, as long as we see an offer letter from that new company along with 1 month of pay stubs, we can use that income right away. And a lot of times I had the situation actually where they leave from that one job to their new job, they're actually getting paid more money now. So you actually you'll qualify for more because you're at your new job, you're getting a larger base salary, right? And then along with that, the third thing I wanted to touch up, what was the third thing I just said? I forgot.
6 month.
6 month break. I'm trying to remember the last one I just said. Lost my train of thought on that one. It was the 6 month break. It was the
Increase in pay.
Oh yeah, no, it was going from, if you go from part-time to full-time, right? Like how does that work? So first and foremost, let me touch on that part-time. The bank, what they do for part-time income is they just average your year to date on your pay stub along with the past, 2 years, basically a 2-year history as well, and they average it over 24 months because part-time income is always changing up and down. It's always fluctuating. It's not a guaranteed hours, right? So with that, you can only use an average over 24 months. But let's say that your job offers you a full-time position, right? So you can get an offer letter from them or some type of letter stating that you're switching from a part-time employee to a full-time employee, and if there's also going to be any income changes, right? So with that, as long as we see that you went from part-time to full-time and we have a month of pay stubs supporting that, you can use that income right away as well to qualify for more. So that's one thing that I do see a lot happen too is you can work from part-time to full-time. That's how the bank will look at it.
That's good. That's good information. I actually didn't know about that last one. So,
yeah. And then the other one too. I'm sorry, this is a lot with income, but I kind of want to touch as much as I can on it. If you have 2 jobs, right, the bank needs to see if you work 2 jobs, the bank needs to see 2 years of history, consistent history that you've worked 2 jobs at the same time, right? So let's say if you've been working this one job for a long time and then last year you started working the second job, the bank can't use both of those incomes. They can only use one because you have to have a 2-year history of working 2 jobs. And so that's a big one as well.
Thank you, Angel. So that was a lot of good info there, homies. If you have any questions, you can reach out to Angel. He's the master at this. Angel, where can we find you at?
At Your Mortgage Angel. You guys can always feel free on my Instagram. I'll have my contact info as well. So feel free to reach out to me if you guys DM me, text me, email me, whatever, if you guys feel more comfortable with your guys' questions. Me along with Anthony, we're just here to help you guys, whatever your goals are to be a homeowner, that's what we're here for. So like me and Anthony probably always tell people is you never know till you try. So feel free to ask us any questions, and you may be closer to home ownership than you think.
Absolutely. So thank you again, homies, for joining us for the podcast. Thank you, Angel, for breaking that down for us. Catch you guys next week. Take care and stay safe, y'all.
Thank you.
Hey, homies, it's Anthony. This podcast contains my opinions and is for educational purposes only. It does not guarantee any projections and should not serve as a basis for any purchase or sale in real estate.